Good evening and warm welcome to all the participants. We are about to begin our 226th session on WiseViews Leadership Conversations. We are joined by the speaker, Mr. PL.M. Palaniappan. I hope I'm pronouncing the name appropriately, sir.
Yeah.
Good evening and welcome, sir, for joining us.
Thank you.
We also welcome a special guest today, Dr. Ved Purishwa, who has been helping us with curating the whole thing as well as writing the summaries for various sessions that we have conducted so far. That is 225 to be precise. Thank you and welcome, sir, Dr. Ved Purishwa. I'll do a brief introduction of the guest and then take it forward after that. Allow me to share my screen, please. So these are WiseViews Leadership Conversations, as I mentioned. Today's topic is the Great Valuation Disconnect, Why Prices Have Parted Ways with Fundamentals. This will be led by Mr. Palaniappan. And I take this opportunity to introduce Mr. Palaniappan. He is an engineer with an MBA in International Finance and brings 25 years of experience in the finance industry, with specialization in strategic investment in capital markets. Over the years, he has gained extensive expertise in framing investment strategies, particularly focusing on long-term value creation in the stock market. As the founder of Vramath Financial Services Private Limited, he is also a member of the NSE, BSE, and CDSL. His contributions extend beyond business management. He served as a board member of the Derivative Council at the Madras Stock Exchange, playing a key role in shaping derivative trading strategies. He is actually wearing multiple hats, and some of the responsibilities like providing strategic management of handling of strategic management of Vramath Group, client education for wealth creation. He provides financial education via YouTube, his own Vramath channel. He's helping salaried individuals to create wealth as well. MSME support and turnaround, that's where he specializes and supports. He also promoted Amrut Courtyard, which is a beautiful destination for wedding, which is probably little around Coimbatore, if I understand it correctly, and offers exotic backdrop for the special events like weddings. Whether you're planning an unforgettable wedding or a corporate meeting or an elegant evening ceremony, Amrut provides the perfect backdrop. One day, I hope I get an opportunity to at least visit that without any of these events. He received several awards. One of them is Vartaga Vitagar Award, which means a business strategist from Know Your Nagarathar. He holds a Bachelor of Engineering in Civil in the year 1993 to 97 from Madurai Kamaraj University, and he holds MBA from our own institute. He is a proud alumnus of ICFAI, and it's a welcome comeback to Mr. Palaniappan. I'm very happy that he's here. Thank you so much, Mr. Palaniappan, for joining us this evening. Professor Prasad, he's the senior director in academic wing at ICFAI Group. He brings 30 years of rich experience as an entrepreneur, as a corporate professional, and also as an academic now at ICFAI. He holds BTech from IIT Bombay and PGDM from IIM Kolkata. Welcome, Professor Prasad. Thank you so much for joining. Mr. Palaniappan, and just before that, we have a large team of youngsters who have joined today as part of this session. They are planning to understand and learn from you, sir. And we'll keep that in mind, and all our responses and questions will be built around that. We have a few questions definitely to work on, but I want to thank all of them for joining on a Friday evening like this. With this, I request you to commence the session. Thank you so much, sir.
Before Palaniappan begins, I want to say that all of us have a standing invitation to go to that resort in Coimbatore. So you just have to inform him and he'll be ready to receive you.
Thank you, sir.
Yeah, please welcome. Yeah. Vanakkam, Namaskar, good evening, ladies and gentlemen. I have to thank my professor, Dr. Ved Purishwa, for introducing me to the team ICFAI now. I have to thank ICFAI and team ICFAI. The Great Valuation Disconnect, the topic we are going to discuss today. We may discuss all the asset classes like equities, gold, silver, real estate, everything here for the valuation is concerned. Before jumping into the main topic, I have to clear the basic two things. I have to discuss the two things. Why someone buy a share? Okay, on the expectation that it will go up. Okay, that is the reason he buys. At the same time, you have to keep it in mind that someone has to sell. Why someone has to sell? On the expectation that it will come down. That is the reason he sells. So someone buys with the objective of going up, someone sells with the objective of coming down. So ultimately, one optimistic and one pessimistic meet at one point and end up in trade. There is no result. In colleges, you are Professor may give you marks. There is no right or wrong answer. Here, there is no right or wrong answer. Only time can answer you. Who is the winner? Okay. You bought something. Your colleague sold the same thing. The price has come down. What will happen? When you discuss with him, you will be in a situation that you lost everything. You did some mistake. But after 1 week or after a month or after a year, it may go up. So what make you to hold for a year or multiple years? Even as per Warren Buffett, no need to sell the asset. He says that. So what makes you to hold the asset is conviction. That is the most success thing is that you have to create a conviction to hold. Before buying, you have to be very clear that why you are buying. And then once you build the conviction only, you have to build the position. Otherwise, you will be discussing with the seller side and then you will be doing mistake and you will be ending up in stop loss. That is what happening in the reality. In India, 99% of the traders they are making losses. Even our FM said in the budget. That is the reason they increase the STT for the futures and options. What drives the price? See, we buy a asset class that it may go up. What drives it? One thing, it can be a fundamentals. For example, if a company, if TCS or Infosys, if they declare good numbers, the price goes up. But in today's scenario, we are in the fag end of the declaration of Q3 numbers. There is no major expansion happening, but the index is not coming down. The index is coming down for the past 3 days. Okay. Whoever has declared bad numbers, the price is going up. If someone declares good numbers, price is not moving in the positive direction, it is coming down. Why? That is what we are going to discuss the whole session. Now, the next 20 minutes. So, before getting into that, let us discuss the macro part of India. The GDP of India is $4.187 trillion. We are the fourth largest economy. We contribute 3.68% of the total GDP in the world. We are the largest population in the world, something around 146 crore people. Our GDP, our government and Indians are very proud in saying that our GDP is something around 7.4%, which is the largest and fastest growing economy in the world. But we kept the base year as 2011 and 2012. The IMF itself, it criticized in the last January month itself. And then now the government of India, they want to change it to 2022-23. So that very soon that announcement will be happening on 27th of this month. So let us hope positively. If it happens, then the real growth rate of India will be public to everyone. That part, our government is very raising the callers and saying that our debt is very, very less. True, there is no doubt that our debt is very less. Our debt is very less. Okay. The USA is having something around 38.5 trillion debt, and their GDP is approximately $31 trillion, but their per capita is $76,477. You have to note it down. China is next to USA. Their GDP is around 19.4. Their per capita income is around $13,306. Their debt is also something around $11 trillion, which is something 0.6% of their GDP. UK third, India is something, our debt to GDP is half, but our per capita is 2818, which is very, very poor, not at all comparable with any of the top 3 people in the world or top 4 people in the world. I think Germany is the third largest economy. I missed it here. See, all because of, thank God that our GDP expansion is seen in this current scenario. The US was in the same situation when it was in 1980. You can imagine that situation. We are something around 46 years behind US and 20 years behind China. So coming back to the valuation part, the Nifty 50 is closed today at something around 25,471 as on today. As this is the today's closing. For the past 3 days, Nifty is coming down because of the AI threat from US. Our earning per share is something around Nifty 50's earning per share is 1,143 rupees. So PE ratio, it works out to something around 22.27. Price to book value is 3.5 times the book value. Our 1 year CAGR, compounded annual growth rate. This is the CAGR is the term we are going to use throughout. It is around something around 9% for the year Nifty has given. In 5 year, our CAGR is 11%. 10 year CAGR is 14%. This is the main topic. This chart is going to cover the entire topic for the day. Our earnings growth for the year, Nifty earnings growth for the year is 2.5% there is a expansion happened, but Nifty has given something around 10% return. Our 2-year earnings expansion is around 10.75. Nifty has given a 2-year CAGR of something around 9.77%. That is almost parallel to that, plus or minus 1% equal to that. You can take it. So 3-year is also similar. 5-year, the earnings expansion is 24%, but Nifty has given a CAGR of 12%. This is because of COVID. The COVID year, all the factories were shut down, and then the earnings were, no one thought that the factories would be shut down like that. So don't consider this one. So the 10-year earnings expansion is 12%. Nifty has given a 12% CAGR return. So which is almost proportional to each other. But this time it has given 500% more than that. That's, we are going to discuss why that overvaluation is happening. See, this is the PE chart since from the Nifty has started. Okay, since 1998, our PE ratio it went up to 23 and it has come down to 16. Almost we say that 16 is the average, 16 to 17 is the average PE ratio for Nifty that is considered to be the safe zone for buying. But the BJP government, they formed the government from 2014 onwards. After that, they were very clear, and then they kept everything expensive, and then they maintained that everything above 20%. It went up to 31, and then now it is maintained at 22.3. That is visible from the next chart. This is the bar chart, candle chart, I say yearly chart. This is the year the BJP, they won and they formed the party. After that, you can only see the green candle. There is no red candle. This is only for this month, January, February, 2 months, still 10 months, 10 more months is there. I don't know what will happen at the end of the year. That we will discuss in a separate part, okay? So our government is very keen on maintaining the index. Why index has been maintained? Index is the barometer of the economy. When you travel somewhere, you no need to talk anything about the economy to anyone. Yes, you check the stock market index. You go and check the stock market index and how the past performance. If the market is doing good, the economy is doing good, you no need to worry about that. If the stock market is doing badly, if the index is doing badly, you have to be very careful about your belongings. Example, you take Mexico, Argentina, whenever you travel, a lot of pickpockets may happen. So you check the economy. The index is a barometer of the economy, I always say. So our government is also very clear, and then they maintained it. That is visible from the earnings also, PE ratios also. So far we talked about the Indian barometer, Indian valuation, Indian part. Now let us consider how the rest of the world is doing. See, coming to conclusion, just by reading about one index is not sufficient. We have to compare with the competitors. Then only we come to know that whether we are doing right or wrong. S&P 500 is the global index. So far, that has given 17% return. In the last year, so far, in the last 2025, that has given a 17% return. Dow Jones, it has given something around 9.62% return in the last year. NASDAQ is a small index, technical and technology index, has given 25% return. But India has given something around 8 to 9% or 10% in the last 1 year. Nifty has given one of the most underperformed market. But since 14 onwards, we were one of the expensive market when compared to the rest of the world. FTSE is the London index. Last year, it gave 14% return. DAX is the German index. It gave 28.5% return. But German economy was doing very badly. You check the economy. So whatever the theory we say that when index is good, economy is good. That's what I said. But here, the economy was doing badly, but German index did very well last year. Japan, last year it has given a 20% return. Japan, after a long time, the central bank, they raised the interest rate 3 times now. I hope you all might be knowing that. Hang Seng last year has given something around 15.8% return. KOSPI is one of the highest return it gave in the world. And that too in the Asia is something it gave 40% return. Even now, the momentum it continues in KOSPI, Korea. So the PE ratio, which Korea is very expensive now. Korea is around 18 now. Most of the countries, whichever it gave something around 20%, 25% return previous year, their PE ratio is around 18, 19 only. You can go and check into this worldperatio.com. You can Google it and you can check it. New Zealand's PE ratio is 30, which is one of the highest. but the growth rate of the economy is very slow. But India, we talk about the 7% GDP and we claim that we are the fastest and we projected the capital market high. We kept it high and elevated high and we maintained it something around 22.8, 23. Even it went up to 30 also in between. That was visible in the chart. So far we have seen all the index, Nifty, major indices and all, which has some metrics, earnings. We can measure the earnings. We can measure the growth. But let us talk about this non-ferrous metal, gold and silver, bullion, we call it as. Yesterday, it crashed by something around 2%. Gold has crashed by 2%. Silver has crashed by something around 7-8%. As of now, it may be hovering around 4,987 dollar per ounce. One ounce is around 31.1 grams. Okay, it is in the terms of dollar terms only we talk. Okay, so silver is around approximately $77 per ounce. It is trading. See, we have only one metric to measure the gold and silver. That is called gold-silver ratio. The GSR ratio as on date is 64.45. That gold per rate in ounce divided by silver rate per ounce. If we divide that, it gives 64.45. We all know that Sir Isaac Newton, for Newton's 3 laws, first law, second law, third law. But he was the warden of Royal Mint, UK. At that time, he framed one formula to arrive this gold-silver ratio. He arrived a formula and he fixed it at 15.5 is the ratio, which was followed globally for 213 years till 1930, from 1700 to 1930. After the Bretton Woods system, only dollar is the only current currency that pegged against the gold. But even 1970s, that also they are out of the gold pegging ratio. Now everyone can start printing on its own. Now it's all maintained. So from 15.5, it went up to 82 and currently it is hovering around something around 64, 65. So other than the industrial use, there is only huge speculation is happening. Last November, December, we were able to see that Twitters that Samsung, they went into Mexico mines and they funded and then they got the whole contract for next 2 years and they paid the entire amount in advance. After that, only silver started going up. And then they are in tie-up with BMW and then they started solid-state battery they introduced and every battery is going to use 1 kg of silver. Lot of storytelling happened, but these are all the true one. But up to what extent? The industrial usage for silver is no-brainer one. It is there since from the beginning. It's not today. Brent crude, the current price of Brent crude is around $67 per barrel. This is the only asset class not touched much so far. In coming days, we don't know what will happen. That story, I think we will discuss it separately. Bitcoin is another asset class that lost its value by 30%. It went up to 1 lakh USD and then now it is around 66,000 USD approximately. What is the fundamentals driving the Bitcoin? In Tamil Nadu, in all the college going children are doing the trading in Bitcoin. I don't know who made money. Everyone is in the losses. To the sad state, few people, they lost heavily. Better part, somebody, they have the app and they traded with thousands and 2,000s. But this is a casino culture sort of thing. That's what all the youngsters started doing. It's all because of social media. US dollar currently pegging at something around 90.66 INR versus USD. This is I'm talking. The only two currencies, INR and dollar, is the two currencies depreciating with the rest of the other currencies. The dollar is also depreciating. Indian currency, INR, is also depreciating. Rest of the currency is appreciating. For example, you take the dollar index. Dollar index is currently hovering around 96.8, which is the lowest so far. From 99.7, it dropped down to 96. Last 10 days back, it was at 99. So far we talked about the global index and Indian index. And then the main story brewing is the technology sector from US. The global investors, the AI is the new theme going on. Daily they are launching some new technologies and new products that is disturbing the technologies. For example, you take NVIDIA. NVIDIA is one of the GPU suppliers, semiconductor suppliers. OpenAI is the main theme behind the AI. See, till 2020, no one knows about NVIDIA. After that, only NVIDIA, they came into the picture. When they got the orders from OpenAI. They got the orders from OpenAI for 40 billion on condition that they have to invest 50% of the profit in OpenAI itself. These guys also, they accepted. So I think it is something like a circular trading sort of thing. Whatever the profit I get from you, I'll invest on you. So when they get 50% margin, nothing wrong in 25%. It's like giving a commission to a referral fees. It's like something like similar to a referral fee sort of thing. Instead of referral fee, they say it as an investment. So it is nothing, just a similar case of circular trading happened in the investment form, but which strengthened the balance sheet happening in NVIDIA. For example, you take a market cap of NVIDIA is something around 4.65 trillion, is one of the largest market cap company in the world. Next one is Apple. The market cap of NVIDIA is bigger than the GDP of India. See, you can claim that the PE ratio is 47. For such a fastest growing company, you can say that the 47 PE is a valuable one. When India, more than 150 companies are trading around more than 100 PEs. So, which is far better. But no, that is not the case. But as a fundamental analyst, we always look into the cash flow from the operational activities. That is more and more important. Here, that is not reflected in NVIDIA. That is, most of the analysts, they made a complaint in such a way that the cash flow has not been reflected in that. Then next company case study is AMD, Advanced Micro Devices, that from $5 to something around $205 now. That is hovering around that. See, when NVIDIA was supplying GPUs and semiconductors to OpenAI, these guys, they approach that depending on one supplier is not a safe one. So we can also supply. That is the way they joined that. But OpenAI said that, boss, we don't have sufficient funds to invest, sufficient funds to buy. What they did is they issued equities. What AMD issued allotted equity share at 1 cent for OpenAI. And then they said that on getting, we will make an announcement in such a way that we got orders from OpenAI. Based on the announcement, price will go up. At that time, you sell and you give the money to us. On that condition, they accepted, and then OpenAI, they made money. They gave orders to AMD. AMD share also went up. So what is happening here? It looks crazy, no? Allotting shares at free of cost. If Reliance takes stake in any shell company, that company will go up. So the shareholders, they can make money. So this is the circular trading sort of thing happened. The Magnificent Seven, more than $30 trillion market cap happened in this Magnificent Seven companies. So this is the way these companies, the AI bubble started brewing in now. Still that bubble is there. This is the way they distributed the losses to public. Public also, because of thinking of short term, they started buying the shares, and then the share prices went up. It is a chain reaction started brewing in. Even the same thing happened in India, and same thing happened in all over the rest of the world. When last year, when Indian market was flat, few other Asian market went up because of on comparative basis they took it up. This is the flow chart of OpenAI cash flow. This is a zero-sum game. They are doing business with themselves. Only NVIDIA is the profit-making company out of this. The rest of the companies, they are expected to make profit in 2029, 2030 only. So until then, loss-making companies are having such a big valuation. This is the another flow chart. Kindle. This is the spin-off company from IBM. 2 days back, they declared the numbers, and then a lot of discrepancies after that happened on that. Price crashed by something around 54% in single day, from 24 to 10. See, the domestic IT companies also showing the weakness. Even today, for the third day in India, a lot of IT companies, they are hitting the 52-week lows. Early days, we stick to the fundamentals. We kept the valuation low. And then we were having something target of something around 1680 PE ratio, 16 to 17 PE ratio. Now we all kept everything high, and then we were see the government, the disinvestment is also like thing happened. For example, you take all the fertilizer companies were hovering around less than 20-30 rupees, were hovering around 1,000 rupees now. They kept it high, they elevated high, and then they started disinvested, they diluted the stake. So we moved from cash flow from operation should be positive to a turnover based company. Fastest growth, only growth. We started measuring only growth. That is a major problem happened in all over the world. The Twitter is a major problem now. See, beyond fundamental analysis, beyond numbers, if somebody tweets, markets give more weightage. For example, Donald Trump itself, he gives a breaking news in Twitter only. That is having a major impact. Lot of gap ups and gap downs, huge market erosion, huge market creation is happening. Short squeeze. See, these global leaders, They are not blunt to make such announcements. They are very clever. They are cunning. They are biased also. I'm directly I'm saying that they are biased and they are making money out of that. They are creating bad news and then they are making the people to go short into the market. And then one fine day, when the short elevates, they are giving some good news in the Twitter. And then the short squeeze happening, they are forced to buy at losses. So this is what happening in the global scenario. Twitter in the last, since October, November, December, everyone was talking about China is buying gold, Russia is buying silver. But now what happened? After touching 120, now silver is hovering around 77. Gold is hovering less than $5,000 per ounce. But did any government declare that we have increased our reserves, including India? There was a Twitter going on that Indian people, they sold bond and then they bought gold reserves. But there is no official records into that. Even Robert Kiyosaki, he was giving a target of something around silver can hit a $200 per ounce. But there is a evident records that he sold at $80 per ounce and then he bought Bitcoin at 1 lakh. That is also in loss. So post-COVID, we moved from growth to liquidity and fundamental to liquidity. That is a major problem all over the world to all the asset classes. So gap down on gap ups, we covered it. Warren Buffett, one of the largest investors in the world, Berkshire Hathaway, he owns something around $334 billion to $348 billion cash. But that too, he is moving his funds from US to Japan. As I told, Japan is the only country raising interest rate. America and India is keep on bringing down the interest rate to attract the investors and keep the currency pressure. But problem is most of the banks in America, they borrowed money from SoftBank or any other bank in Japan because of zero interest rate. So they bought at zero interest rate, they invested and played and multiplied in the several fold in US market and rest of the world. And now the interest rate in Japan is also going up. Now everyone is feeling the heat now. So these are all the Indian companies, top 15 new economy stocks with negative profit or even nil profit or little small profit, but with the very big market caps. First is Meesho. Meesho has made something around loss of $4,000, 4,000 INR, 4,000 crores. Is having a market cap of 70,000 crores. Swiggy, 3,000 crore loss, is having a market cap of 94,000 crores. Ola, 13,000 crores market cap. And then, for example, Paytm. Paytm is in loss of some 63 crores. It is having a market cap of 74,000 crores. Even Warren Buffett, he invested at 1,240 level and then he made a loss and he exited in Paytm. So, US debt is around $38 trillion. American dollar is also losing its value as on yesterday. But yesterday, Russia made an announcement that they are going to settle all their settlement in US dollar terms. So the formation of big currency may be a question mark. I don't know. So the commodity prices has gone up in the last 3 months along with the bullion prices of copper, prices of aluminum, uranium, everything went up. So these are all used in the industries, especially in automobile and any capital goods. So their inflation rate will go up. It will have a subsequent consequences in the coming days. The margins will be under pressure. We can see that visibly in coming days. In India, the government in budget, they said they gave all the reforms for 5 years. The budget is for 1 year. But to make it, to project it bigger, they talked about allocate some 1 lakh crore for 5-year term. Like that, they made a fancy statement. They have done that, but no major reforms. India does not have any browser. India does not have WhatsApp. India does not have Telegram. India does not have any products. Just we are a service economy. We are using others' product. If Google shut down one day, what will happen to the Indian data? They collect the data from us and they sell the data to us. The big bubble, there is a big bubble in the OpenAI cloud, and yesterday AI Trust, they launched a new product for wealth management product also that is disturbing the IT companies like anything. So the huge unemployment rate is expected in technology sector. IT companies margin pressure may come in. Unemployment may go up. So all the asset classes are in bubble. Where to sit? Sit on cash is the only place in current scenario. What is the solution? If you ask me, sip on dip is the only solution. Take the big capital from the market. If you have any debt or anything, you settle the debt. If you have any big housing loans or any other loans equivalent to the investment into the market, you pull the money from the market. And then how can you build the wealth is by SIP, systematic investment plan into the direct equities or through mutual fund. When there is a dip, you can use the SIP. This is the only mantra for the coming days. X is the major platform that is disturbing everyone. We have to be very careful. All storytelling, no authentication. If some messages comes in paper, somebody is responsible for that. Here, nobody is taking the responsibility. So we have to be very, very careful. The first, when I said, when a seller and buyer meets each other, there is no answer. Here, we have to think on our own. We have to decide on our own. We have to value on our own. We have to stick to the fundamentals, what we learned during the studies. There is nothing beyond that. In Tamil, there is a book called Tirukkural. It's one of the great one. It has all the values like it. Lot of doges in English also. So nothing beyond that. We have to trust what the fundamentals are, and we should not be carried away by the emotions. For example, I have to add only one more point. In January, Indians invested 150 tons in gold. At what price? Around $5,600 per ounce peak. All because of the Twitter and all because of the emotional imbalances. That too, most of the housewives, what they did is, even if they don't have money, they pledged the gold, whatever they have in the house, in the bank, they borrowed money and they invested again in gold. Is it right or wrong? Means in a rising market is okay, in a falling market is a double-edged sword. So I hope we can conclude and we can open for the Q&A.
Thank you, sir. Thank you very much. This is a huge canvas that you have covered in such a short span of time. I must thank you for taking us through various indices to assess the performance, not just Indian indices, but also the other countries that you have. You have actually captured so many graphs and told us a bigger picture in a nutshell, and helped us understand the bird's eye view of what's going on and where to compare. Not only that, the multiple assets class that you discussed, apart from what we have been talking about usually, into the crude, bitcoins, and other classes as well, including the bullion. And then the big discussion, I'm sure more questions will come up on the AI bubble, the technology area, the AI bubble questions will come up definitely. And of course, I want to thank you for the solutions that you indicated. We'll have to understand that a little more. But yes, in times of dip, go for SIP is what you suggested. But bigger than that, I think the emotional imbalance and the greediness of people, we have a tendency to get carried away by social media platforms, especially the X, the Twitter. And that's where the narrative is being built or manufactured for certain gains by political leaders themselves. So wonderful, sir. I think it's a huge canvas. I don't know if we can cover all the questions, but I want to congratulate you for fitting everything into 20-25 minutes. Thank you so much. Without much ado, we will now get into Q&A. I request Dr. Prasad to start the first cluster. I'll come back for the second. Over to you, Dr. Prasad.
Thank you, Professor Rao. Thank you, sir, for giving us a very wide canvas and a very quick run through what is happening. And you have portrayed the situation for our understanding. And you've also suggested what we should do. A number of questions were related to that. Given this kind of a situation, should we look at the liquidity? Should we look at the growth? Should we look at the fundamentals, etc.? So I think you have answered about what needs to be done. Your solution to that you have given. So I'll take this question to, also get a greater understanding. When you say that, okay, look at SIP. So we are still emphasizing on fundamentals. So what, what kind of lessons would you like to give on valuation fundamentals with respect to investment in SIP? And how do you make a choice on this? So this will help us to be a bit steady on the suggestion that you give. So how do you do the valuation if you look at the SIPs?
See, in current scenario, the global part is uncertain, but Indian part is certain. India is a thickly populated country. No one can destroy India for the next 20-30 years. We are a self-consuming economy. Our country has to feed 146 crore people. So healthcare is the major area we are covering. So we are giving prime importance to healthcare. Our pharmaceutical and hospital sector comes under, our diagnostic sector comes under. So in valuation part, we always measure EBITDA. EBITDA should be double digit, above 10. EBITDA and EBITDA margin, I'm talking about EBITDA margin. EBITDA margin should be about 10. And then it should be consistent in maintaining that. If you look at the margins for the lot of pharma companies, they are capable of maintaining the margins. Even Donald Trump or US, they imposed tax on India other than healthcare sector because they are the major consumer of our generic drugs. They tax only the patented drugs. Patented drugs in India is very, very less. So in this angle, the Indian healthcare is the major beneficiary. Then in valuation angle, beyond PE, EBITDA multiple is the most important thing. Then ROE, ROCE, return on equity and return on capital employed. Return on equity should be in double digit. Return on capital should be more than ROE. See, what is the return we are capable of making in the equity part that is given in the ROE. But in capital employed, whatever we borrowed also, what is the return we make? For example, you take ROCE for PSU companies will be lower than ROE because they are not capable of managing the borrowed funds effect. That means that the funds are misused. Okay. This is the simple way of valuing the companies and giving weightage for a sector. I hope I covered your.
Thank you. I think for the kind of discussion we are having, you have given some very important directions on this.
Yes.
Thank you for that.
If I may ask, for the index, Palani, what would be the EBITDA margin for the index?
Index, there is no EBITDA, sir. Index only just index is no brainer can play in the index. It's more safest. No, only fundamentals of the economy is more important. The PE ratio is more than enough. For example, playing F&O players, whoever makes money, they play only in Nifty only. There are 183 stocks allowed to trade in F&O. Out of that, if they play, they have to look into the fundamentals of each and every company and they have to play. That is mutual funds role. If an individual investor who play in individual companies, they are the losers. So the safest part is index.
Thank you. Thank you for giving us broad, safe directions.
One more thing here. See, our Nifty, there is a proven record of 12% CAGR for Nifty. If you are a retired person, if you are confident of Indian economy, you no need to buy anything. Just a Nifty piece is enough. Just simply you keep adding 12%. If you are happy, that is more than enough. No need to do anything. No research required, nothing. Keep adding on any fall.
And even better suggestion for a lot of people around.
Yes. Because it is for the past 20 years, it is giving 12% return, 10 to 12%.
Thank you. So you have given a concrete suggestion for, say, people who are above a certain age.
Yeah.
Now the next question is related to profile.
Yeah.
So if there are various types of profile of investors, so what are your suggestions for them different from this average suggestion that you have given?
Can you be clear on that?
Yeah, there are various people with with different investing profiles.
Yeah, I got it. Some risk-taking profile you are talking about. It's about high beta. See, as a fund manager, my objective is always think of making 18% CAGR as a benchmark. I do. So we give more weightage for small cap and mid cap companies. Small cap companies, the growth rate is much higher. But the problem is the mutual funds may not come into the small cap companies. So that part you have to be very clear. See, there are large number of investors. They follow some mutual funds where they invest. They just simply they track and they do that. That is the person to person. The objective may vary. So to achieve 18% without the combination of small cap into the portfolio, we cannot make.
Thank you. Okay. Another question which came up was, and this is for entrepreneurs, startups. To what extent do they need to keep an eye on valuation and price, and how is it important for their dynamic?
See, the startup companies may not be making profit for the first 3 years or 5 years. The thing is that the game begins once they scale up. But I'm telling you, I'm working with a lot of the angel investors, startup companies. Why someone is investing in a startup company? To loot the idea. One big fund houses, even I myself I invested. Every year I go and attend the AGM in Mumbai. Most of the startup companies, these companies they invested are sold to Mahindras and other big corporates. So that part, whoever raising funds, they have to be very clear. They have to try to maintain something around 75% stake into the startup. Is not free of cost. That everyone has to be mindful. That debt is much cheaper than equity. Equity is very expensive, but we may think that we may not need to repay that. But they will loot the ideas. How many startups scaled up in India?
Thank you. I think I'll just change the context of the question for a
Yeah.
little more context. Now, if you're belong to an organization which is now, taken funds, it is on the, on the stock market, it is listed, and you're an entrepreneur who belongs to that, or the stakeholders who belong to that group. Now, for such people, what is the input that you give for? I mean, no longer a startup. Maybe they are listed, something is going on, we don't know. So, for them, what is the relevance of valuation versus price in the perspective that you spoke about?
See, as a listed entity, the promoters, they have to always try to create the wealth for the existing shareholders. They have to be honest and they have to create the wealth. For that, they should know most of the companies are thinking that raising funds from the public means once their raising is over, is their money. No, it's not the case. We have to repay to the public domain. The company, it depends on the product. See, if a lot of ifs and buts are there in the questions, so I assume that if the company is technology-wise, it is very strong and sound means the way I raise the funds means for scaling up part, I am raising the funds. So once I get it back, I have to try to repay to the shareholders in the form of dividend. Giving back to the shareholder is more important. The promoter should focus more into
that. There is a charge on Indian organizations, IT organizations, that they are giving off by dividend and not reinvesting into technology which matters. So how do you?
That is what our all the top companies are doing. Infosys, TCS. See, in the TCS in 2020 they came for buyback at 3,000 rupees. In 2022 they came for buyback at something around 4,500 rupees. In 2023 they came for buyback at 4,150 rupees. They spent 51,000 crores into that. Instead of that, they would have invested that money into some product development or into R&D sort of thing. Why they pay back? Because they have to pull out funds from the company and then that has to go back to Tata Sons. That is the self motto only. They have done that. We can also claim that their corporate governance is very high, but that is not the case. They also participated in the buyback. In Coimbatore, there is a company called KPR Mills. The promoters also they participated in the buyback. That is the easy way for the promoter to pull out from the company. They cannot maintain beyond 75%. So obviously they have to participate.
So
But
what happens to what should the stakeholders, because the stakeholders are also investing?
See,
The discussion.
our Indians are very short-term minded people. I'm very sorry to say this thing. We are not long-term oriented. Whatever we get, we are happy with what we got. Even we were not able to find. I am into the industry for the past 26 years. My investment tenure is 10 years. But if I tell it in the industry, people may laugh at me. But still, I'm doing the same thing. Okay, we should think more long-term.
So I think if I simplified, what you're suggesting is stay with the mutual funds, let them make all these calculations with respect to such organizations, and
no, mutual fund also they invest in stock market. They can also come down. I don't want to. I never said don't stay with the mutual fund.
I'm sorry, SIPs.
Yes, SIP means in equity also we can identify some good companies, we can park it also. In direct equities also we can do the SIP, right? I never said mutual fund. See, once if we give it to the mutual fund, they will park it into large caps. Again, they will go and buy Infosys. They say they think that it's cheaper. For example, Parag Parikh is a fund. I know Mr. Parag Parikh very well. He came to Coimbatore several times. We had a personal interaction several times. So from 3,000 crores to 1,40,000 crores, I traveled with him. Okay, I saw that journey, but now they kept something around 7 to 8,000 crores in ITC itself. But ITC business itself, if somebody bans, if the Odisha government they banned cigarette selling into the state, if something happened to banning the cigarette sort of thing, what will happen? It's a sin business. So averaging and betting with the public money in sin business, it's also a wrong. It's a no-brainer concept. I'm telling you. So as of now, the company may be having 36,000 crore cash. There is no debt. It is a very good company, but if something happened to the cigarette business, what will happen to that? What they will do with the money? So in the past several years, they invested heavily into FMCG sectors. They bought some chili powder company. They introduced some Sunbeam coffee, but where is the coffee now? But the chili powder and all, whatever they bought at 2x, 3x the price what the other competitors are bought. So they don't know how to, after Deveshwar, proper acquisition merger, there is a flaw into the system.
Yeah, I think we are getting more nuances in, and that's good. Some more input for us. A last question I have is the sustainability argument and the investments based on. So how do you How do you pitch on that argument?
See, we have to always with the mid caps and small caps, we have to we have to allocate the portfolio accordingly. Something where there is a growth. For example, the team digital in India is another growing one. For example, you take Bombay Stock Exchange. We identified Bombay Stock Exchange when it was at 10,000 rupees, but now it is around 10,000 crore market cap. But now it is around more than 1 trillion market cap. So without this, the platform, no one is going to trade for. And then CDSL, central depositories. There are two depositories, CDSL and NSDL. So without these things, no one can open demat account and with that. There are some broking houses. They have the online platform facilities. Without that, no one can trade into that. So we have to identify that. These are all profit making. The BSE is a very good profit making. The cash flow is very good. CDSL cash flow is very good. So we have to give more weightage for this thing than investing into Swiggy or Ola or whatever loss making or turnover based companies. The cash flow is more important. Cash flow is king.
Thank you for coming back to the original point.
Yeah.
At this juncture, I think we are at 7:24. I hand it back to Professor Rao.
Thank you. Thank you, sir. It's a great conversation that's going on. You touched upon some of the hygiene factors, some of the rules of the game on one hand, and on the other hand, some sharp responses to questions that most of the journalists who write in business papers try to be diplomatic. But unlike them, you have been pretty decisive in your response. Thank you so much for that. I have one or two questions before I open the mic for the audience. I'll also wait for Dr. Ved Purishwar to raise his hand in case he has any questions. At any time, you can interfere.
Yeah, so Sudhakar, just so that we don't miss the thread, finally, you talked about the TCS money being diverted to other Tata Group companies. This is something which people in the industry, IT service industry, are aware of. This is the biggest scam, if you ask me, in India, corporate governance. Why we are not hearing more about this? And secondly, the other large groups like the Tatas, are they better than the Tatas in terms of corporate governance? By the way, Tatas are considered to be great in corporate governance, and this is what we have just understood. They are diverting the money of a profit-making company to all the not so profitable companies.
Would you like to respond to that, sir?
No, sir.
Okay.
You have decided to be diplomatic. Okay.
So it's a comment. He's neither supporting nor opposing. Okay, but then that's a very good question, very sharp one. I'll go to the next one, sir. Yeah. In one of the slides, you talked about Warren Buffett holding huge cash.
Yeah.
When experienced investor, legend like Warren Buffett, holding high cash reserves, what signal does it give on market valuations? Is cash holding a strategy, or is he not missing opportunity?
No, sir. See, we have to buy. As per Warren Buffett, he always says that your profit is at what price you buy matters. That decides your profit. So when there is, for example, the Kindle, it lost from $44 to $10. If we buy, the risk is very less. But for that, we should have a cash, right? So he made his money so far. He built his wealth like this thing.
Okay. Sir, another question that you touched upon briefly for want of time, I guess, is the circular investment that's happening, much akin to the circular trading that goes on. So it is a clear-cut recipe for a bubble in the AI, the NVIDIA to AMD, AMD to Microsoft, Microsoft to OpenAI, and all those things. Yes. So if we juxtapose this with the earlier bubbles, like .com or fiber optics cable bubble or any tech cycle, the investments go in first, and then there is always a lag, and then the market takes over. One such example is that in the fiber optics case, the company that went to laundering is the WorldCom. The CEO had been jailed for wrong invoicing, over invoicing. But then it took clearly about 8 years or 9 years until Netflix came up, until Spotify came up, and then started using the bandwidth. And then many, many more people had come in. Don't you think we should have a considerate valuation of technologies given the tech cycles that they have gone through, and not give the verdict of a bubble right away?
I'm not saying that the product is useless. The product is work. But the problem is, see, after the evolution of AI, at what price you have to pay, that matters. As like Warren Buffett says, what price you have to pay, what is the multiples. See, in India, the index has been maintained at 23 level for the past 1 year. And then so far $2 trillion went out of India. FIIs, they pulled out from India. And then government introduced 3 swap ratios against $3 trillion. And then with US dollar, they introduced the swap ratios. For what purpose government introduced that swap ratio? Okay. Is it the government helping the FIIs to take money and to maintain the currency at 89 level, 91 level, and 92 level, right? So around 90 level, they want to maintain and to maintain the cushion. Suppose if the government left as it is, the rupee would have been at 97 or 120. Okay, that is the reason. So, to coming back to your question, it will have a consequence effect. For example, what is the purpose of the AI? What is the who is the end user of? After sometimes, may 10 years or 20 years down the line, the implementation of AI going to be into robotics. That is going to be the ultimate future. That is going to do everything on its own, right? You foresee that. If I foresee, I'm able to see that instead of watchman, some robo will be standing below our ICFAI university, and it will be screening with the people, whoever without ID card, it won't allow to enter. And if it will give a message to you, what price will ICFAI afford for 10 crore rupees for the robo? What happening now? These guys, they invest several trillion. What is the power required for a data center? 10 gigawatt. How do we get that 10 gigawatt power? How many uranium nuclear reactors we need? What is the cost of that? Is it affordable? What is the break-even period? No one knows the break-even period. See, in the auto sector, if somebody introduce some product, I know what is the cost of the product, what is the cost of the platform. If I scale up to this thing, when I will have a break-even, say 36 months down the line, I will have a break-even point, and I will be whatever manufactured after that is going to be a 0-1. I know that. But here, this $7 trillion out of this in 2030, then IBM, Mr. Arvind, he made a clear statement that is not going to be recovered. We all know that, right? This is the knife falling on all our head. At what cost and whose cost? Everything on the investor's head only it is possible. Right. As like AMD did, right? The greedy investors. So we should not be greedy and we should not get caught into that. That is the awareness I want to make it here.
Thank you, sir. Thank you. That's a very balanced kind of assessment that you're given, also an advice. When the hype is higher around some of the emerging techs, then you tend to actually follow the initial investors, and a large number of them go behind that.
Yes.
And wait on factor in the tech cycle lag, and probably be very realistic about it. Thank you, sir. I think several lessons are there, but I simplified in terms of the broad takeaway. The last question from my side before I open the mic, Srinath, you'll have to allow me to open the mic also. I need to be enabled on that. Sir, the question is, some time back, Trump had declared that India is a dead economy.
Yeah.
Suppose you were to argue out Trump. Give 4 bullet points that disproves Trump.
Sir, he is perfectly right. I say that. He is perfectly right. India is a self-consuming economy. We produce only agricultural products. We have population. 80% of our population is below our poverty line. Only 20% of the people are feeding the difference 80% of the people. So our country's burden is to feeding all the people. And giving freebies is the major problem now. At the time of research, we say that 146 crore people, and then the CDSL we valued CDSL to sky high. As of now, the 15 crore demat accounts are there in CDSL. Okay. That means that it's not mean that 15 crore people are in the stock market. Each and everyone is having 3-4 accounts, multiple accounts with multiple brokers. I don't know how many demat accounts you have. Mr. Ved has. You might be having 2 or 3. So out of that, if you pinpoint, only 5 crore people may be investing into the stock market. Like that, in US, something around 36%, 63% of the people are into mutual fund investing, and 36% of the people are into the direct. Technology-wise, we are all far behind. Even the companies like Infosys, Wipro, TCS, they are only servicing companies. We don't have any product. Sometimes India may talk very big about Zoho. But the Zoho product is not affordable, very expensive.
Okay. So you are alluding to the comment.
Our per capita income is less than $3,000. We have to improve that. Their per capita is $77,000. China is $16,000. We are not at all comparable.
Yeah, but sometime back you mentioned also that nobody can destroy Indian economy for the next.
That's what. Nobody can destroy means because we make food for ourselves. We are not dependent on anyone. But if they stop Google, what will happen to India?
That's fine, but then is it a dead economy? Even if self-consuming economy is thriving, it will survive, and then
it will survive. But we don't have petrol, we don't have gold, we don't have silver, but we manufacture food that is sufficient for our 146 crore people. That's what India can feed Indians.
But a large size of the consuming classes in India.
But our people don't want that, sir. Our people, they want all the hi-fi things only.
Right, sir. So with this background, I will now open the mic for the audience to ask questions directly. I am going to borrow your time for additional 10-15 minutes, sir.
Yeah, sure.
The best of the conversations are when they make room for questions from the audience. I'll request you to bear with me. Srinath, you have to enable the people or allow me to enable the people to speak. Yes. Yeah. Kush, please go ahead.
Hi, Kush, tell me.
Audio's off.
Yeah.
Hi, sir. Good evening.
Good evening, so much.
Yeah, sir. You brought up a well articulated point of per capita income. This is also highlighted by Geeta Gopinath. I think previously she was in some of the committees, finance committees. So, what do you think the future of India in terms of per capita income? Look at our spending on education, our healthcare. So always it has been criticized that it is not up to the par, like when we compare to China or some other developed economy. So what's your thoughts on that?
It's a tough question. Why I'm saying tough means early days, our ancestors and elders, they asked us to study. And then after studying on all these things, now again we are going to the thumb impression part. Because of AI, now people, they are looking for Americans and Westerns, they want only a gig economy. They need mechanics, they need auto drivers, they need somebody who delivers food, that type of people only. That is a major problem. They want to convert Indians for that. So they're very sad for that. I don't know about the future, but still education is the only way. Literacy is the only way.
Right, sir. Right, sir. Thank you.
Thank you, sir. And also, sir, one more question. Like you said about the gold prices. So, what do you think? The gold prices is now super inflated, and
it's highly inflated. Is rigged and maintained. But I don't know whether America will reset gold or not. In long back 2 times, America they reset the gold price. It is in the Trump hand. Anytime, anything, any midnight he can declare anything. If he reset the gold price, that is the price.
Okay.
Understood. America has 8,000 tons of gold.
Understood, sir. Thank you.
Right, sir. Thank you, sir. We have not raised any questions on the latest US trade deal and the Indian economy budget, the Indian budget that is announced recently. I hope some of the participants will ask questions in that area. We will now request Sridhar S.
Hello, Mr. Palaniappan. Hello, Mr. Palaniappan. I have a question. Pretty interesting viewpoints and perspectives you had given. Thanks for this opportunity. My question is, like you have said that in one of your final slides that cash should be where you are sitting, and just wait out for any better opportunity, right? Like, are you referring this for Indian markets or the US market? Because Indian market is already punished for last 15 months.
No. Only the mid cap and small cap is punished. Still pending is there, but index has been maintained. There is no correction happening here. So better to wait on cash.
Okay. And with regard to gold, I think there is a different perspective building, which is holding up the gold prices and still continuing to feed the appetite, not just of Indian housewives, but of several people wanting a core allocation in their portfolios, which is that, if as a proxy for dollar currency. So from that point, and considering that we are not actually consuming, we have 35,000 tons of gold according to some estimates
in Indians. But the problem is, in January we invested something around 150 tons. But yesterday, have you seen the Russian announcements?
Yes.
But after that, will gold go up?
Only if some central bank again buys gold. So
where is the proof? Which central bank bought? There is no official record of any central bank bought. All in Twitter.
Right.
All in Twitter. There is no official record. Even this free trade agreement with the US and Europe Union, where is the agreement? Who signed the agreement? I never seen any signed documents. No official documents. Only PS Goyal is giving statement and the economic advisor is giving some other statement. Only statements I am able to see. I am not able to read any paper. I am not able to read in black and white.
Right. But
If that
considering
will
that,
happen, Asia would have come down. Asia share price has not come down. Because Harley Davidson, if they allowed to do a zero duty, Asia would have dropped. But Asia is soaring strong only in India.
right. But sir, considering the returns that Japan or South Korea and other markets have given, and India has only given 9% return, at some point, don't you think the FII is, after taking out 2 trillion, would also plonk back some money and that will revive the large cap stocks, contrary to what you have said?
It's a $1 million question, but why they should come back here? Even when the prices has not come down, why they should come back? Either rupee should depreciate or script should fall. If rupee depreciate to 120, they can come down. Or if the market corrects by 20%, then they can come down. But when there is no correction, why they should come down? When there is no opportunity, they will come. Or otherwise, they would have pulled out the money to pay back the loan to Japanese banks. You think like that?
Right. Sir, one last question from my side. What is the framework you follow? Other than valuation, is it also TA? Or do you look at behavioral finance? What are the...
Psychology is the more important thing. I give more weightage for psychology, investment psychology.
Okay.
Fundamentals plus investment psychology. I won't trust technicals. I won't trust any other things.
Okay. Thank you so much, sir. Interesting. Thanks, Dr. Rao.
Thank you, Sridhar Satyaraju, for those good questions. ICFAI, Analyst Magazine and all. Thank you so much. Kush Srivastava, please go ahead with your question.
Hi, can you hear me now?
Yes.
Yeah. Hi, Kush.
Hi, sir. If I am an investor with enough amount of investable funds, what should be my strategy in the current state of market?
As I told to Mr. Sudhakar Rao, you should focus more into healthcare now. There are 2 Indian-based companies. A lot of hospitals are there. They are not dependent on any forex. For example, I don't want to name any companies, but you focus more into hospital sector. Even Hyderabad-based hospital sector, one big hospital is doing extremely undervalued. They have 10,000 beds.
Yeah.
Okay. How about the IT as a
Time being, we have to keep our fingers crossed in IT. Let it settle down. Don't catch the falling knife.
Okay. Thank you.
Even though we are service providers only, we don't have products. There may be a big blow can happen in Indian IT.
Okay, good. Thank you.
Yeah.
Thank you, sir. Very clear. Thank you so much. Mahesh Mohanty.
Sir, good evening.
Yeah, good evening.
Sir, actually, I want to ask one question. What do you suggest to the youngsters? How they will invest for next 3 to 5 years? Where they will invest?
Little bit audible.
Where they will invest in the share markets for next 3 to 5 years? Is there in large cap, mid cap, or small cap?
See, first of all, we have to be more focused on sector. Healthcare is the sector I am giving more weightage. Out of that, you have to allocate funds to large cap, mid cap, and small cap also. We have to distribute the funds accordingly, 40-40-20 ratio. Give 20% weightage to small caps because small caps volatility may be very high. So for better conviction, we have to keep our exposure limited into that. So 40-40-20 formula in healthcare sector we can allocate. And then FMCG is the another area is this 146 crore people has to consume on a daily basis. Fast moving consumer goods are also around, but their growth rate is very, very slow. Is around 7%, 8% CAGR they are giving. Avoid ITC and invest into FMCG. And then coffee is the another area I want everyone to notice. There are only 2 or 3 companies in coffee. I can name it. Continental Coffee is there. Tata Consumer is into coffee. Tata Coffee merged with Tata Consumer. Then one more, some small cap is there. Avoid the small cap. These 2 companies, the coffee price is falling down. That margins may go up. And then this Continental Coffee, they are one of the largest and global player. Their capacity is 72,000 tons, metric tons per annum. It's a Hyderabad-based company. Okay, so you can start tracking this. It's around 1,000 rupees now.
Okay. Thank you, sir.
Yeah.
Thank you, Mahesh Mohanty, for those questions. Thank you, sir. Thank you very much. Just to add, before I invite Dr. Prasad for any last questions that may have. the CEO of Continental Coffee is going to speak on WiseViews on 6th of March.
Oh, okay.
So just like you have spoken today, he is going to
Okay.
speak about his growth story and some challenges and his
One of the fastest growing with cash flow, backed by the fundamentals.
I'll
That too, they are in the non-coffee growing area.
Right. Fantastic, sir. Dr. Prasad, you have any last question?
I think I'm done.
You're done. Dr. Ved?
So you have painted a very pessimistic view, Palaniappan, of India and
But instead of giving, sir, I'm very patriotic to the country, no doubt about that. But I want to be honest to be my part. Okay, I don't want to as a. This is not a. I'm sure that there won't be any politician into this thing. If some politician are into this forum, then there may be an issue. They may raise questions. But since everyone is a professional, I don't mind and open to my heart.
Also, in a country like India, already we have a lot of sycophancy and no big industrialist probably will speak openly against the government. As it is, the dissent is very, very low in India.
Yes.
No, but globally, we have seen investors, like the attack on Adani, which happened a couple of years back, by the hedge fund.
Okay.
So that is very common. No, I'm not asking for a direct response, but I'm just wondering, some of the points which you made are very valid. How do we kind of bring it out into the open? How do we make these ministers of the government become a bit more humble and realistic instead of just
Sir,
being...
they know, sir. They know, sir. They know, sir. They know all these things. Even our current government, they know this thing very well. They know the status very well. If you look at the budget, how our FM presented, most of the fund allocation, she presented for 5-year tenure, sir. The budget, don't you know that the budget is for the year? But if you look into you read the fine print, the most of the allocation is for 5 years to make it a mega, to make it as a big. These are all politics.
Thank you.
But
Thank you for some very
sir,
insightful
this is not the
comments.
case with India. This is the case even in US also. We have to take care of ourselves. We should know what we want. We should know. But nowadays, the problem with the youngster is they don't know what they want. Even to get into a hotel also, they don't know what to eat. A diabetic person goes and buys a mini meal. He leaves all the puri, he leaves all the sugar, sweet items, then he eat the leftover. Instead of that, he would have directly got some Indian. So that is the mistake everyone is doing. So first of all, the SWOT analysis. All the professionals should know their strengths. They have to leave the emotion when it comes to decision. They should they should keep the emotion out of them. Okay. They should know their weakness also. They should work after that. As like a company, we have to do our due diligence. I want everyone to write what is the way you are taking a decision on this. You take a diary and write it for what purpose you are deciding something. When there is a change in the decision, you have to go and see for what purpose you got. Is it met or not met? That is the only way to rectify us.
I think overall it sounds, a tale of caution. Be careful. Look at what is getting done, and then take steps.
Objective is to caution everyone. That's all.
Excellent, sir. Thank you so much for spending this time with us, which helped us understand the fundamentals, the basics of this game or the rules of the game itself, and a lot of data that you have shared with us to look at. What are the things that you should look at before even jumping to any conclusion? But India is largely driven by, sometimes by algorithms, sometimes by emotion, sometimes by astrologer. To put money, most of us go to astrologer. There's no hardcore research to tell how many people are driven by astrologer indications or advisors to put money on stock market. Whereas that seems to be a greater driver for valuation or prices in this country. So, and also of course social media driven narratives that we get taken away, in the sense we get carried away by those things. So fantastic, sir. I think several questions you have answered very sharply, and it is there's nobody political here. It is a learning platform, and we are very happy that you have responded to all these things. Although some of the responses may not be popular, but learning potential is more important than popularity, and it should be useful to young investors who are around the screen. It should be useful to the 60 plus kind of investors who are around the screen. Many segments are part of this platform on a weekly basis. So I think it is a good lesson and indicator for all of us to draw something from this session. I'm very happy you have spared your time for us, sir. Kindly email your PPT, the final PPT. We'll request Dr. Ved as ever to write a wonderful summary for this session also. And at the end, I want to thank Dr. Ved for bringing back our alumnus into the platform. Thank you, sir. Thank you so much for connecting. And thank you for joining yourself. It's a rarity that you join with window open. Thank you so much. Give us more opportunities to host you. And I always wonder, why am I not keeping you in WiseViews platform as a speaker? I will answer that question myself after talking to you. Oh, so ladies and gentlemen, thank you so much for your patience, and very good questions have come up. Thank you, and join us next week as well. We will learn from another leader. Till then, keep reading and connecting it with the current affairs in India and abroad, and a great deal to learn from Mr. Palaniappan. That's the pronunciation, Mr. Palaniappan. The name he kafi hai. Very good. So thank you, sir. I want to end this with thanks on behalf of everyone at ICFAI. We look forward to staying in touch with you.
Sure. Welcome. Thank you.
Thank you, sir. Thank you all.